Hello and welcome to this session. I hope you are well. We are going to now begin the stages during this mentorship of putting all of the elements together. And I'm basically going to use this module to essentially show you exactly what I'm looking for in terms of how I'm looking to actually trade in the market. Now, I'm going to open up with a various few different things because there are a few different models or entry models you can utilize, but it all becomes valuable and viable from the same thing, which is basically trading in direction with the higher time frame. And if you've been plugging away as normal during the whole of this program, you will obviously understand that we need to be trading in relation to the higher time frames. And the market is always looking to rebalance into areas of inefficiency, and it is always looking to target liquidity. And we know this and understand this from every single time frame, because you can see, if you look and study, that we will get reactions out of areas of inefficiency and we will target liquidity below. So this is a live market, the NASDAQ, with Owanda's price action. And what I'm now looking at is basically for this to continue moving lower. And I'm looking at a potential reaction out of this area of inefficient price action. And what I would like to see is all of the confirmations that I have to basically take place inside there, where I can then take a small piece of the market, knowing that the overall target is this liquidity right here, because the market is trending lower, meaning we want to be trading in direction with the higher time frame. So I'm looking for a few different things in this area here. Now, there's a couple of things you can do, and I'm going to break down all of the best ways to do it over the next couple of lessons. You can trade this from a higher time frame, and you can trade this from a smaller time frame. You can potentially, on a smaller time frame, as far as the 1 minute time frame, trade all the way up to this level in a bullish environment, knowing that your overall target is here, as long as you have all of the confluences in place for you to be taking positions in the market. But the main thing you have to understand is market structure. And the main thing you have to understand about market structure is where price is likely to go. So for example, if we delete everything here, let's just say, for argument's sake, because this is a weekly time frame, in 3 days and 10 hours time, let's say the candle closes whereabouts it is now, it is going to open up another area of inefficient price action, meaning that if we start next week bullish, we could target price action to reach this area here, knowing that long term we want to sell. Now, from a smaller perspective, I'm talking about, let's just say for argument's sake, the price action finishes here. On a smaller time frame, and I mean a 15-minute time frame, price action will look pretty bullish, meaning you are within your scope to potentially trade it as long as you've got certain things running in your favor. But you have to understand that the highest of probable scenarios will come when you are looking to trade out of these areas here. Now, I go through phases, and it all depends on the account sizes that I trade with. Predominantly, I have a couple of different personal accounts. One is a smaller account, which I'm more than happy to trade in either direction, as long as I've got the highest probable scenario involved. But I've also got a much bigger account where I am only willing to trade it when I see confirmations within the areas I actually want to trade within. That is basically because I'm a conservative trader. I'm a sensible trader, and that's the way I want it to be. And I want to make sure that whatever happens during this program, you're not overcomplicating it, because a lot of people would look at two areas of imbalance and think, well, which one do I wait for? And the truthful answer is that we don't know which one it's going to tag itself into. But what we do know is that there are two areas of inefficient price action. And if we look at this from a weekly perspective, that could end up being one area of inefficient price action, as opposed to the daily that has got two areas of inefficient price action. It doesn't matter. It's not that deep, because basically when price arrives in this one, it's either going to do one or two things. It's going to arise higher and it's not going to give you this model that you want. It's just going to continue higher, in which case it might be coming to this one before it decides it wants to break lower. And that's absolutely fine. We have to just be basically waiting inside of our key levels of interest to see if price action is going to arrive there and to see if we're going to get exactly what we want out of that area. Because if you look at this on a 1 hour time frame, you can see this is actually looking pretty bullish. And it's very, very clear to me that whilst we're moving in this higher time frame spectrum, I would be waiting for all of this to move away from itself, because this is not tradable price action. This is ugly price action. I wouldn't trade that on a given Sunday. Not a chance you're going to get me anywhere near this price action. So what we're actually waiting for is for price action to come lower, to give us a move to then go higher to target this area here. Or we can basically just sit on our hands and we can wait for this to basically trade higher. And then we would target this liquidity down here. So if it doesn't make sense right now, don't worry. This will make sense at the end because we've got more lessons to follow. But hopefully you found this one useful, and I will speak to you on the next one.